$2,000 handle back on the precious metal, $2,039 on gold, up $41 the ounce. Yes, I know Creedy's got more on oil coming up, but let me just tell you, West Texas Intermediate up 3.8% right now, $123.90 for a barrel of WTI. Brent, the global benchmark, up by 4.2% at $128.39. Today's the day to keep it locked into Bloomberg Radio. Fast-moving markets, tons of headlines. We've got you covered. PepsiCo exploring options for its business in Russia. This according to Dow Jones, citing sources. Options include writing off the value of the unit. We're talking PepsiCo in Russia. PepsiCo shares right now, they are lower by 2%. McDonald's temporarily closing all of its 850 Russia locations. McDonald's shares up now by 0.4%. GE scaling back its operations in Russia. It will, however, continue to supply healthcare equipment and support existing power generation operations. Again, that 10-year yield, 1.85%. Gold up 2.1%, $20.39 a barrel. Cannot ignore energy, worth repeating. West Texas Intermediate crude up by 3.8% right now, $123.92. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet with the Bloomberg Business News Flash, talking about the energy markets. And as you mentioned, WTI crude, we've seen wild swings in the last 2 days. Yesterday, we saw a high of up 13% above 130 a barrel. At the close, it was up about 3%. Today, we've seen it go up as much as 8.5% to about 129 and change. Right now, we're just below 124 a barrel. But that just mirrors, the headlines coming out, whether or not there are deals being arranged to release some supply to help ease the constraints that we're seeing currently when it comes to the energy market. So there's a lot going on here.
We also heard from President Biden earlier today, as Bloomberg News reported over the weekend and yesterday, the U.S. moving to halt not just oil imports, but all energy imports from Russia. And then even before we heard from the president, Carol, we heard from the U.K., a similar move in the U.K., halting oil imports, but not natural gas.
We also heard from Shell and BP saying they will not make any new purchases of Russian oil and gas, but won't be able to immediately disentangle themselves from the country due to long-term contracts and the likely difficulty of finding alternative supplies. We are an interconnected market. Well, right now going on is CERAWeek conference. It's in Houston. Earlier today at the conference, our Creedy Gupta, Bloomberg Markets correspondent, caught up with Ryan Lance. He's ConocoPhillips chairman and CEO, and they talked about the current market correction and surging prices.
I don't see a real violent correction happening in this market. So, the other uniqueness of this market is we're recovering from a very, very low pandemic-led demand destruction. So we were off about 20%, as we came through 2020 and into 2021. So as the economies around the world started re-gearing up, the demand is starting to flow. And in fact, we've now reached pre-pandemic demand levels in our business. And the projection is demand will grow by over 1 million barrels a day this year. Yeah. So it's a strange sort of offset now with this overprint on the Ukrainian situation and everybody trying to take supply off while demand is continuing to recover. And that's created this dynamic of high prices. It's the lack of supply to meet the growing demand coming out of a pandemic low.
And you do wonder, as more supply is brought into the market, if we start to see an economic slowdown, how does that play longer term? Anyway, that was our Creedy Gupta speaking to Ryan Lance, ConocoPhillips chairman and CEO at the CERAWeek conference underway in Houston. It is S&P Global, or it's done by S&P Global. It is one of the energy industry's biggest annual gatherings. And Creedy is there on the ground joining us via Zoom. Or actually, I think she's on the phone right now. Forgive me. So, Creedy, great interview. If everybody wants to hear more of it, they can go to Bloomberg.com. Tell us about what are the dominant conversations that you're hearing on the ground right now.
Thank you. One of the major things that really caught my eye here was the conversation of prices and demand destruction. It is not lost on some of these major oil CEOs that demand destruction could very quickly turn these prices around. We're seeing prices rise. I think we're at $130 a barrel, which Ryan Lance during the interview had said, this is kind of the level where you start to see people change their behavior, really kind of cut back a little bit. We also caught up with Vicky Hollub over at Occidental. She said prices could go as high as $150 a barrel. So, but it's not lost on them that this isn't a permanent state of play. And one of the things that they're talking about is, sure, we can ramp up capacity. Sure, we can ramp up production, but that takes time. It doesn't just happen immediately, especially after you're already trying to ramp up the capacity from that pandemic low.
Creedy, what are you hearing about the conversations that oil executives are or are not having with the Biden administration?
Every single executive I asked, have you been speaking to the Biden administration? Have they reached out to you? We've had some natural gas pipeline CEOs who said, well, we've sent letters to Granholm. We've sent letters to the Biden administration, but they haven't heard back. And this is really where you start to see the disconnect. Dan Yergin, who is, of course, the founder of this conference, as well as a very well-known oil historian, he said, this is unprecedented, not just in terms of the price level, but it's unprecedented because throughout history, especially the conversations about energy security, energy independence, the White House, regardless of administration, has kind of always been allied with the oil and gas sector. This is a completely unprecedented time in that you actually have this kind of internal conflict where the oil and gas sector and the White House are not on the same page.
It's interesting, the demand destruction. I think that is, something that we're already seeing in terms of jet fuel and airlines cutting back on capacity because of those costs. So you do start to see it impact individual companies making decisions. What do you think? I think about Mike McClone talking about crude, our Mike McClone saying it could go down to like $30 a barrel. I mean, the bigger thematic here, Creedy, is that alternative energy is supposed to increasingly take over our world. Are the oil execs that you were talking to thinking about that? Is that the backdrop, or they can't even think about that right now?
No, they're 100% thinking about it. And what's interesting here is that we talk about oil prices all the time. Natural gas is the cleaner fuel. And it doesn't produce as much emissions as oil prices do. And this is why Europe is has such a large dependency. It's because they were far out front of the United States in terms of making that transition away from oil. But it's also kind of served them, unfortunately, I guess, or the reverse of what they expected because of that Russian dependency. But what's important to keep in mind is these oil companies are actively talking about carbon capture, better technology.
Yep, they have to do it. All right, Creedy Gupta, markets correspondent at Bloomberg via Zoom from Houston, Texas.
All right, let's go to check the latest world and national news. To Washington, D.C. we go. Hey, Nancy Lyons.
Thanks, Tim. President Biden says the U.S. will ban imports of Russian fossil fuels, including oil, which is a major escalation of Western efforts to hobble Russia's economy. Biden says the move will likely add to the already inflated gas prices we're seeing here at the pump.
This is a step that we're taking to inflict further pain on Putin. But there will be cost as well here in the United States. I said I would level with the American people from the beginning. And when I first spoke to this, I said defending freedom is going to cost. It's going to cost us as well in the United States.
Biden says Americans will not be part of subsidizing Putin's war. Well, while the U.S. imposes its own ban on Russian oil imports, Bloomberg's Anne-Marie Hordern says it's not likely European countries will follow our lead.
I spoke to an EU official very early this morning who said Europe's just not there yet. And I don't think the world expects Europe to be there. I mean, if you just look at Germany alone, they are heavily, heavily reliant on Russian fossil fuels. Now, Olaf Scholz said yesterday they want to loosen that dependence on Moscow, but it's not going to happen overnight.
The U.S. imports about 700,000 barrels a day of Russian crude, while Europe imports more than 4 million barrels a day. The first person to be tried in last year's Capitol riot has been found guilty. Guy Reffitt of Texas was charged with interfering with law enforcement, entering the Capitol with a weapon, as well as other charges. Prosecutors say he was a militia member. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in D.C. A couple stories. We were just talking with our Bloomberg Markets correspondent, Creedy Gupta, who's there at the energy conference in Houston right now. And along those lines, a story about a tanker carrying around 1 million barrels of Russian oil changing its destination for France after initially signaling the U.S. Atlantic coast, according to ship tracking data compiled by Bloomberg. I love when there are stories that come out of tracking those massive tankers and ships.
You can actually track oligarch yachts on the Bloomberg terminal too. Yeah, it's really cool. We're not talking about an oligarch yacht here. Is that what happened when I
tried to reach out to you earlier and I couldn't find you?
Yeah, I was busy tracking ships. We're talking about the Beijing Spirit here. It was loaded in Murmansk, Russia over the weekend. It was signaling Philadelphia before changing for a port in France as the next port of call. It's set to reach the destination on March 13th, so a few days away. The tanker carrying Russia's Arctic Verandy crude oil. That's according to data from Bloomberg.
Yeah, this is said to be the first tanker that is carrying Russian crude originally bound for the U.S. to now change destinations since Moscow invaded Ukraine. Now, along those lines as well, The prospect that the U.S. could ease sanctions on Venezuela's state oil producer to offset Russia's cutoff from global markets has observers wondering how much crude the South American nation is able to add to a market really roiled, of course, by the war in Ukraine.
The most optimistic outlook from the energy consultancy IPD Latin America sees production nearly doubling by year end if exports from the South American country can flow freely, and it's able to import much needed parts and equipment for its crumbling oil industry. There are skeptics out there, though, and they say that it would take billions of dollars of investment over several years before Venezuela can actually increase output substantially.
Yeah, it's we are living in
Can you imagine that? Could you have thought that we'd be, reaching out to Venezuela in 2022 to get oil?
And this would require a waiver of some sanctions
Yes.
in order for them to do it.
Yeah.
So, strange times, and this is according to people familiar that maybe this could happen, but strange times lead to strange alliances or new rethinks when it comes to the world order. You are listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic on this Tuesday. This is Bloomberg.
breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. PepsiCo looking at options for its Russia business, including writing off its value. This according to the Wall Street Journal. PepsiCo shares lower today by 1.6%. McDonald's temporarily closing all 850 Russia locations. McDonald's shares, they're higher by 0.8%. Apple introducing 5G versions of its low-end iPhone SE and iPad Air tablet. Apple shares up today by 0.3%. Volatile session. We have got stocks, oil, and the dollar all whipsawed by the war in Ukraine. Stocks are higher right now. The S&P up 25, a gain of 0.6%. The Dow up 220, now up 0.7. Nasdaq up 138, higher by 1.1%. 10 years down 25, 30 seconds. 10-year yield 1.85%. Spot gold with a 2,000 handle right now, 2,032 up 1.7%. And crude rallying 3.6%. Volatile day for energy again. WTI at 123.69. Barrel of Brent 128.17 up by 4%. Recapping stocks higher with the S&P up 0.6. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, the new issue of Bloomberg Business Week magazine due out later this week. Ongoing coverage, of course, of the Russian invasion of Ukraine and how Ukraine is struggling to get war bonds to retail investors, not just domestic ones, but out more broadly.
The story by Priscilla Azevedo Rocha, credit reporter for Bloomberg News, who joins us now on the phone from London. Carol, as you mentioned, this story featured in the upcoming issue of Business Week magazine, though you can read it now, like I did, on the Bloomberg terminal, also at bloomberg.com/businessweek. Priscilla, let's talk a little bit about war bonds. Initially, this is the type of product that is not available to the everyday investor, right? This is available to institutions and larger pension funds. Is that something that Ukrainians can actually change and pretty easily, so retail investors can have access to these?
Hi, Tim. Hi, Carol.
Hi.
Good night or good afternoon there.
Yes.
Thank you for having me. So basically, it depends. War bonds can be sold to different investors for different purposes, right? Like we've seen that in the U.S. during World War I, they sold bonds that actually the people could buy to support the war efforts. But in the particular case of Ukraine, is a bit trickier because what the sovereign did, they took the regular Tuesday auction slot and they turned that into like a military bond fundraising effort. So they used the mechanism that they already had in place, which was dedicated to institutional investors, central banks, pension funds, and more sophisticated asset managers, and used this vehicle to put together this war effort fundraising.
Well, and let's just remind everybody, an auction did happen today, and Ukraine raising $229 million in a second war bond auction, and they are using this to fund its military and resistance to Russia's invasion, according to the country's Ministry of Finance. What's interesting, I was trying to find it, how difficult, though, is it for it to go beyond the domestic home front in terms of selling?
It is very hard because you need to put a lot of legal protection in place. So you need to put a prospectus together. For those who are not very familiar, prospectus is a legal document that will detail the risks of the bond, the conditions in terms of payments, who are the banks involved, and everything. So for them to do such a thing under war is extremely hard because the conditions are not very favorable for them, not detail the risks of the bond, the conditions in terms of payments, who are the banks involved, and everything. So for them to do such a thing under war is extremely hard because the conditions are not very favorable for them, not favorable at all. And it's something that also requires being fully integrated in the market, right?
Right. Well, but in terms of international demand, I do think about international investors who are maybe looking to lend a helping hand in some way. There is the demand for it.
there is demand, and you could go like on the Ministry of Finance Twitter page or in its LinkedIn page, and you see tons of comments of people saying, how can I buy those bonds from the US, from the UK, and things like that. But right now, because those are domestic bonds and they're denominated in local currency, they're not in US dollars or euros, you have to go to the primary dealer. The primary dealer is the bank that the sovereign, it's a bank that works for the sovereign and sells that to investors. In the case of Ukraine, there are specific 11 banks. They're the sovereign's primary dealers, and those banks sell to investors. So they do the deals. So if me, Priscilla, I want to buy those bonds, I need to either call a broker or a private bank or someone who has a connection to the trading desk of one of those banks that could place the order on my behalf. So it's not something straightforward. It's something for very sophisticated investors.
At what point, though, could an investor actually get access to this through a retail trading platform, if ever?
In this case, I don't think so. I don't think it's possible. I think they need to develop a new product that would allow retail investors to participate. They are working on it. They're indicating that they're trying to do their best, but under the circumstances, they are not fully integrated to international capital markets, right? And the yield that they currently offer is not in line to other emerging markets. And they also had their sovereign ratings downgraded because of the war and the risks that the war represent to the sovereignty of the country.
That's a really good point, right? Like you think about it, like what happens on the other side. So if, international investors get in or investors get in, we don't unfortunately know the outcome. And it could be that Ukraine remains independent and a sovereign nation, right, with its own debt markets and sovereign markets, or if it becomes part of Russia, Tim, like it's a different story potentially.
What would that story, I don't want you to speculate though, Priscilla, but this is kind of what's priced in terms of coupon though, right? That risk.
Yes, that's right. So if the outcome of the war, you end up with a Moscow-backed government in Kiev, then you have questions like, will this government honor its commitments to international creditors? Is this government going to be sanctioned by US, the UK, the European Union? So you have all those questions that you need to assess when you get involved into something like that.
Should we anticipate that there will be another raise by Ukraine, another auction?
It is hard to say. They do conduct auctions every Tuesday, but by saying that they will conduct more auctions to fund the military, it's saying that they believe that this war is going to go ahead for further weeks. So they will continue with their fundraising efforts as a sovereign nation. But if those bonds are going to be dedicated to the military or if they're going to be just general budgetary purposes, that is a different story. And we have to wait and see closer to the end of the week.
Well, it's interesting and certainly something we're tracking, and it's a result of the current situation, that war that we are in. Really appreciate it.
A big thank you to Priscilla Azevedo Rocha, credit reporter for Bloomberg News. Check out her story. It's featured in the upcoming issue of Bloomberg Business Week. You can read it now on the Bloomberg Terminal, also at bloomberg.com/businessweek. March is Women's History Month, and every day this month we are celebrating significant moments in women's history. Now with your installment for Tuesday, March 8th, International Women's Day, here is Bloomberg's Renita Young.
Happy International Women's Day. On Today in Women's History in 2017, the Fearless Girl sculpture is revealed across from the Charging Bull statue on Wall Street. Kristen Visbal's sculpture depicted a young, defiant girl standing confidently. The sculpture was installed late the night before. It was placed there to draw attention to the lack of gender diversity and equality in the workplace, particularly in large, powerful institutions in New York City. The plaque under the sculpture reads, "Know the power of women in leadership. She makes a difference." It was commissioned by State Street Global Advisors, who wanted to advertise an index fund that promotes gender-diverse companies with higher percentages of female leadership. That's Today in Women's History. I'm Renita Young, Bloomberg Radio.
A big thank you to Bloomberg's Renita Young for Today in Women's History. And it was, of course, International Women's Day.
All right, folks, we're getting ready to join our TV colleagues for a countdown to the close this in another volatile day of trading. Carol Massar, Tim Stanovic, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Connection lost.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in your trading session. Caroline Hyde, Romaine Bostick, Taylor Riggs, joined now by our colleagues Carol Massa and Tim Stenovic. We welcome cross-audiences, TV, radio, YouTube of Bloomberg to discuss a volatile day, Carol.
Oh my God, you feel like you blink and you might see the market, miss it going in another direction. There's a lot of volatility. If I'm looking for groups that are outperforming, I've been looking at the home building stocks. They're now up about 2.2%, up more than 4% earlier in the session, but that is certainly some outperformance here, Tim.
Yeah, also outperforming today, airlines. We're seeing a bid for airlines. The S&P 500 Super Composite Airline Index having its best day in months, but we got to look at this with a giant grain of salt. It closed down, nearly 12% yesterday, putting it to levels from October of 2020, higher now by about 6.5%.
Context is everything. Let's give the context to the majors, because as we look at an S&P 500, currently up 0.5%. We were up 1.8% at about 1 o'clock today, and we were down more than a percentage point at about 11:30 a.m. today. The whip soaring is phenomenal. 4,221 is where we trade on the S&P. Dow Jones currently up 0.6%. We're currently up 200 points. The Nasdaq actually relative outperformer up 113 points. That's 9/10 to the good. And Russell 2000, up 1.8%. So actually getting a march on. We were up 34 points there, Taylor.
Certainly a better story than it was yesterday. Incredible that the energy sector within the S&P 500, you advanced 1.7% today for now a 40% gain year to date. That is just unbelievable when we think about the energy sector that has really been on a tear. Otherwise, it actually looks pretty risky from a sector level. It's discretionary, it's communications, it's even the financials, as you're really starting to see a lift higher in yields as well here today, Romaine.
Yeah, and we should point out, of course, that a lot of these ructions not just confined, of course, to the energy space. When it comes to commodities, of course, you're seeing 28% gain on soybeans this year alone. Wheat prices up 65%, corn up 27%. Big part of the reason why you're seeing ConAgra is lower here on the day, down about 7%. General Mills and a lot of the other consumer staple stocks also moving lower here. There were a few downgrades from a couple of different analysts today saying that this rise in commodity prices, particularly in food commodity prices, is going to have a material impact on some of these companies. So watch this space, as they say. A lot of the volatility in this market also affecting some of the brokers out there. CME down about 4% here on the day. Tech stocks, they've been kind of all over the map. We were looking at Microsoft. That was a big part of the reason why we saw the market higher, the broader market higher. It was up as much as 2%, now basically unchanged on the day. It was actually lower by about 3% at one point on the day. So again, pretty wide swings. And keep an eye on McDonald's. The share's higher by about 7/8%. They're making a decision to temporarily close 800 plus restaurants in Russia.
Let's go back to the CME, because, Romaine, shout out to the market makers. Shout out to those that are trying to, get trading done in physical assets. The swings we saw in nickel today, when we all came into the office this morning, the seismic moves that took a lot of our reporters who've been covering these markets for decades now, completely jaw-dropping. Look at this move that we saw in nickel. At one point over the course of 2 days, it'd been up 250%. Of course, that being all unwound after having hit that record high of about $100,000 a ton, because, the London Metals Exchange suspending trading, saying, look, we cannot make good on these sorts of trades when there's such risk. Are the brokers on the hook here? We see the shorts have been really hit here, Romaine.
Yeah, and it's it's interesting too. The Bloomberg story quoted a trader, Malcolm Freeman, who's been around for decades, who basically said this is the second biggest event in the LME's history, second only to the tin crisis in 1985. I only vaguely remember that. Of course, I wasn't even born then. Anyway, and I'd go back and look that up just to remind myself. But this is a phenomenal, not only a move, but the decision to actually suspend trading, and the idea now that we're getting an announcement that they're not going to reopen until at least, March 11th, so a couple more days?
Yeah, but remember too, in terms of the markets, that we've had a lot of things put into place because of market swings that we've seen over the last couple of decades, right? Mechanisms that when things go array or crazy, I should say, that you see things put, stop points put in. One thing I do think about with all of these superlatives that we talk about day in and day out is what the Fed will do with all of it. And 1 week from today, we will be all about the Fed decision. Kathy Jones was taking a look at kind of our current situation. She's chief fixed income strategist over at Charles Schwab, and she talked about the sticky position that the U.S. is in as well as the Fed. Check it out.
We have the combination of soaring inflation and tightening financial conditions, and that is putting all of us in a bit of a bind. But it's really putting the Fed into a bind. I think the risk is more tightening than expected rather than less.
All right, and that is Kathy Jones over at Charles Schwab. What's interesting, too, is, and she was on surveillance earlier. I don't know if you saw the Atlanta Fed GDP now. They every week give an update. It was unchanged last week in terms of current growth for the quarter. They're now saying maybe an increase of 0.5%. It's just a reminder that everything is so fluid and moving fast and furious, if you will, in terms of what does growth look like going forward, Tim?
Yeah, if we continue to see inflationary pressures, though, outside of just oil, and we see them continue to, hit consumer discretionary companies, as Romaine was saying, to what extent do we see prices increase and the Fed finds itself in a position that says, wait a second, we're in an inflationary environment, but we're also concerned about consumer spending because consumers are pulling back on other spending because food and oil have gotten so expensive.
Yeah, and food and oil, and don't forget, we're going to get a big WASDE report, the USDA, basically World Agriculture report in a couple days, and it's going to be interesting to see kind of what the yields are coming out of the U.S., but more importantly, what some of the forecasts are out of South America. Remember, they were already being hit by a lot of bad weather that was already driving up prices, and now you throw in the disruptions in Ukraine, both in terms of transportation and throw in energy. And keep in mind, energy prices feed right into this. I mean, you need fuel to ship all that stuff, and if fuel is too high, you curtail shipments.
Right. Yeah, certainly seen a lot of price pressures, though, but we bring it back down to a Federal Reserve, which, yes, we're still in QE, but Carol...
QZ? Did they start something new?
I misspoke. I meant to say QE. But Carol, I think the market's still pricing in 5 to 6 rate hikes this year. I think 5 this year. So that's telling you, at least the market is saying that inflation is an issue and it needs to be tackled.
But Kathy was saying on the back of that, Carol, that maybe that's hard to do when already the market is kind of doing the hard work for the Fed. Financial conditions, if you look also at the funding pressures, something that I know Zoltan Pozar over at Credit Suisse has been doing time and time again, the issue of the commodities stress, how that affects funding stress more broadly, how what was it, JP Morgan, head of trading, saying extreme stress is what their clients are under at the moment. The gyrations in the market aren't going to stop now.
Yeah, and when do you start to see demand destruction? A little bit more of that because of these higher prices and people start to pull back, whether it's companies. We're already seeing airlines, right, move back because of those higher fuel costs in terms of capacity. We've got lots more to talk about, so we're going to be back in less than an hour time. Our cross-platform coverage on radio, TV, and YouTube will continue. We call it Beyond the Bell. We'll be back counting you down to the close on this Tuesday.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, whether you like it or not, or whether how we end by the come December of 2022, U.S. stocks having their second worst start since 1900.
We're not talking second worst start since like the year 2000. You're going back the previous century,
121
Carol.
years, 22 years.
Unreal.
Yeah.
That's amazing that we have the data that goes. Cameron Kreis, right? That's who you gave a shout out to?
Yeah, our macro man here at Bloomberg, watching the markets here. A lot of volatility. And you know, what's interesting is I don't know where the market will end, but we do know that whatever the path will be, there's a lot of up and down to get there.
You've used the term demand destruction a couple times today when talking to Creedy, again, just now. I think that's a really fascinating concept because it's almost, okay, it's like what we were talking about with Abigail Doolittle yesterday, right? And when we think about actually going out and doing things, is the price of doing that thing so expensive that we pull back on it? And to what extent does that become a price destruction element for oil?
For example, my daughter coming home from college and said, maybe you can come pick me up. And I said, no, you can get on the train. Better for the environment.
And this was last week before gas prices were this expensive.
And it's going to be cheaper. I know what it's going to cost me to get into the tank. And then, you think about what goes along with that. I go to the tank, I stop at a rest stop, I buy some food, or, do I go earlier and stay in a hotel and make it easier in terms of the trip? Like, there's just all these things that go into it. I was at the supermarket looking at some things, and I'm like, what? And do I put something back? Like, these are, you do start to make some decisions based on the costs that are out there. And companies are doing it already.
Okay, Thursday we get inflationary figures. We get an inflation report. We understand.
Are you still wondering if there's inflation out there?
No, I'm not wondering. I'm just wondering when it's going to peak.
Well, yeah, I think that's the question. I do think whether it's Jamie Dimon of JP Morgan, we do talk about that there will be some price pressures moved around. Look at the energy. If this war gets put to an end sooner rather than later, do we see energy markets come down and ease, and along with some other supply chain constraints? All right, you're listening to Bloomberg.
Let's get a check of world and national news. Nancy Lyons standing by in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden is ramping up the pressure on Russia.
Today, I'm announcing the United States is targeting the main artery of Russia's economy. We're banning all imports of Russian oil and gas and energy. That means Russian oil will no longer be acceptable at U.S. ports, and the American people will deal another powerful blow to Putin's war machine.
In making the announcement, Biden admits it will come with a cost to the American people. He says the price of gas at the pump will likely go even higher. U.S. drivers are already paying more for gas than in any other time in history. As for the war itself, NATO Secretary General Jens Stoltenberg says it's important for Ukrainian civilians to be able to leave the country safely, but he believes that is not happening.
There are very credible reports of civilians coming under fire as they try to evacuate. Targeting civilians is a war crime, and it's totally unacceptable.
Stoltenberg says the alliance must make sure the situation does not spiral out of control. Poland says it will fly all of its MiG-29 fighter jets to a U.S. airbase in Germany, apparently agreeing to an arrangement that would allow them to be used by Ukraine's military. Poland, in a statement, says the transfer is being done immediately and free of charge. Some major announcements in the NFL. Green Bay quarterback Aaron Rodgers is tweeting he will be returning to the Packers next season, and there are reports that Seattle QB Russell Wilson is being traded to the Denver Broncos. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stenovic, we are live at Bloomberg headquarters in New York City. A couple company stories we just want to mention. Headline just crossing the Bloomberg terminal. Starbucks suspending all business activity in Russia. We credit Reuters on this story. Shares of Starbucks bouncing around today, but they're right now up about 1.2%.
It comes just a couple hours after McDonald's said it would temporarily close its 850 Russia locations.
Temporarily?
Temporarily. That's the question I had for you, Carol. At what point do these companies say, wait a second, it's time for us to dip our toe back into this market?
This is where the C-suite, the global C-suites come together of these companies and say, okay, let's strategize. What is Russia going forward? This has been for the last 30 years since the wall came down, a market of opportunity, an emerging market with growth, and you've seen companies aggressively move in. Do they rethink that strategy and say this isn't necessarily a market that I have enough certainty to be in?
Do you remember those images? I mean, I was a kid when the Berlin Wall came down and when the Soviet Union collapsed, but I remember the images of the first McDonald's
of my career. I remember it.
Those images of the first McDonald's opening up, people lined up to, and it was so symbolic too, right? It was this sort of, this Iron Curtain actually coming down, and
a win for democracy.
A win for democracy, and a win for a market opening up to the world.
Exactly, and the people who were getting a chance really to interact finally globally. So I don't know. We have seen difficult times, whether it's the Middle East, whether it's China. Pick your part of the world where relationships in terms of corporate relationships, country relationships can be strained, and then yet the memory is sometimes short and we move back because the thinking tends to be engagement is better than not. I don't know if this is different this time around.
I don't know if it is either, Carol, and I wonder if I wonder how short of a memory companies will have in this case.
All right, I don't know, and this is one of the big stories. In the meantime, companies continue to make decisions, just want to squeeze in. You probably heard about this headline. Google buying the cybersecurity firm Mandiant for $5.4 billion. Happened late yesterday. We're getting the right through, though, earlier today on the Bloomberg. But again, companies making decisions and moving forward on their business. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, just getting word that Shopify is temporarily suspending its operations in Russia and Belarus. Also, Amazon says it will stop taking new Amazon Web Services clients in Russia, this according to the New York Times. Now, let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. It has been a wild session today with the Dow at one point down 238 points, up 586, and currently rising 209. S&P's gained 21, while the NASDAQ is higher by 127. The U.S. 10-year yield at 1.87%. Gold is up 36. Oil is climbing, and Bitcoin is higher by 2.6%. Among the main 11 S&P sectors, only utilities, healthcare, and consumer staples were in the red. Leaders to the upside in the Dow, Caterpillar, Chevron, and Boeing, while Coca-Cola and Procter & Gamble led to the downside. After earnings, Dick's Sporting rose 4%, and in other news, Pepsi is exploring options for its Russian business. Starbucks is suspending all business activity in Russia, and McDonald's to shutter 850 Russian stores. In deal news, Google to buy cybersecurity firm Mandiant for $5.4 billion. And wrapping things up, Bumble and MongoDB report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. Lots going on. He's got us covered here live. Breaking news, overview of Bloomberg Times Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. And shares of Petco, they are rallying. I meant to bring it up.
9.4%.
Thank you very much, Tim Stanovic. They are up more than 9%. Company beating on both the top and bottom line for the last quarter and upping its fiscal year outlook for adjusted earnings and revenues. Pets all the rage during the pandemic, and they are apparently so too post-pandemic. I got a second dog.
You did.
Just
That's
saying.
right. You're like, the walking example of this. It's always great to speak with Ron Coughlin, the CEO of Petco. He's with us once again in the Bloomberg Interactive Broker Studio. Ron, good to have you back in New York, have you back in person with us. It's been a quarter. How are you?
It's great to be here. I am really, really good. And
business is
more
good.
importantly, my 13-year-old Yummy, dog Yummy, is really good. And business is really good. We announced the 7th consecutive quarter of double-digit growth. Of the 50 top retailers, there's only 3 companies that have done 7 consecutive quarters of double-digit growth. So something we're really proud of with margin expansion.
How are you doing it?
Yeah, we're executing against our strategy. So,
remind everybody what that strategy
is. I'm coming upon my 4th year, and we made a big bet. We made a big bet that we were going to develop an ecosystem that's the full offering that pet parents want. So we have our own vets, we have grooming, we have training, we have supplies, we have food, and we do it in stores. We also do it digitally. And that was a big bet versus trying to be expert at one part of the thing, which is what basically everyone else does. And 54% of pet parents say that's what they want. They want a partner to manage their pet lives. I'm sure it's not easy for you. I used to go to one place for a vet, one place for grooming, one place for food. My hunch is you probably do that right now.
Kind of still do.
Yeah.
But I do a lot online in terms of products, and that simplifies my world.
Yeah, but if you could do it all in one place, and then that company knows you and knows your data, and the groomer knows the same thing that the vet knows, we take better care of you. And so that strategy is working. The second thing that's working is our omni-channel strategy. 80% of our online orders get fulfilled through our pet care centers. We call them micro distribution centers. That means there's faster to the customer and lower cost to us.
Does that mean they walk in too, or no? It's separate distribution centers.
So there's 3. It's your local Petco.
Yeah.
Right. It had 3 different versions. 1, we might ship from that store to you if you ordered online. 2, you could same-day delivery, which you can't do online. Or 3, you might go in and pick it up if you're short on order. Oh, I need to get food on my way home, and you BOPUS it just like you order ahead on your Starbucks, as an example. So that's really working for us. And then our vet business is working, and we had a big announcement last week. We had a joint venture with a vet partner, and we bought them out last week. We announced it. And so we're bringing 800 veterinary professionals into our system. And one of the biggest questions I get from investors is, can you hire enough vets? And
you might have hired my vet, who we loved and adored, and who became part of a bigger practice and then is gone.
Hey, Ron, are investors seeing this story, though? Are they hearing this story? Because the stock is doing well today, but it did hit a record low in late February. It's down 30% from its highs of last year. What are investors missing here?
Yeah, I mean, we got caught in some of the market downturn that happened, and we just need to prove it over time. And that's why I'm so proud of the 7 quarters of double-digit growth with the margin expansion. And also, our bullishness was evidenced by our guide, which was above consensus. There were people who questioned whether we could grow in the second half of the year. We did so at double-digit rate. There were people who questioned whether we can lap next year, and we showed a big, a nice guide going forward that people appreciate. And I think that's why the stock is responding, in addition to the fact that I think that there is a premium for companies that can execute in these times, whether it's the labor issues, whether it's the different economic issues. People who can execute are getting a premium right now.
What segment of your business sees the biggest growth? Because you talked about a couple different things, and there's omnichannel, there's digital, there's in the store, there's the vet services, they're selling pets. What is it? What is it that really juices the top and bottom line and profitability?
I love all my kids, and
but some I love a little bit more.
The truth is they're all growing, but if you look at our digital business, we grew 143% on a 2-year basis. We more than doubled our digital business in the last 2 years. I mean, that's astounding. How often do you more than double a business that already had scale in 2 years? We did 25 last quarter. We picked up 800,000 customers this past quarter. So it's truly remarkable what's going on.
So how much of revenues is digital? Purely digital?
Yeah, digital is between 15 and 20%.
And how much of somebody
growing.
who is digital then walks in the store? Like, what are you looking for when you're omni-channel? I was just talking to Chipotle. They're omni-channel, right? They have Chipotle, you're digital only. You can go to the store. You can use the app. There's all these different things. How many people are going to the stores, buying online? Like, you want somebody who's all in.
That's the way the world is going. So if I go through the recent sequence, 2020 happened and everyone went online, right? Even my father, who loves going to stores, all of a sudden became an online customer for the first time. Then in 21, people thought maybe they won't come back. They came back to our stores in droves. And more it is this omni-channel customer. We call it Retail 3.0, where you really bring this promise of omni-channel that we've all been talking about for years together, not only for that experience, but also as fulfillment centers. You hear Target talking about using their Targets as fulfillment centers, and we're very
It's killer, the strategy. Got me to go to a Target store in a long time.
There you have it. And we truly believe we're one of the Retail 3.0 leaders in defining that, combined with the services that we have, combined with the fact that we make a difference in the communities that we live in or operate in. To us, we're one of the definitional companies of Retail 3.0.
Where are you seeing inflationary pressure beyond what every other business talks about, transportation and wages? I mean, is it pet food going to get so much more expensive because of the rise in commodity costs, fertilizer getting more expensive, meat getting more expensive, grain being shut off from so much of the world with Russia's invasion of Ukraine? Where are you concerned about inflationary pressure?
Yeah, you never like to see inflationary pressure come at you as a retailer, and you don't like to pass it through. There's been quite a bit in 2021. We have the highest end customer in the category, so we've been able to pass that on. But at the same time, we're making sure that we provide options for customers. So whether that, all the way from the top end of fresh frozen to high-end kibble to medium price, wholehearted, own brand, to our Vital Care program that we actually announced an enhancement to today, where for $19 a month, you can get, grooming, veterinary, discounts on products, and you can save $200 to $300. So yes, we're having to pass it through, but we're also coming up with options and ways for customers to save to offset some of that.
So you're able to maintain margins?
We're able to. We had sequential improvement in our margins this past quarter.
And that can continue with those inflationary pressures, whether it's food, whether it's labor. I mean, we're talking about energy, and that's a throughput for everything.
So the guide that we provided had EBITDA margin expansion. We've had EBITDA margin expansion pretty much every quarter.
How do you feel about the second half? And I think about the conversation we had with Gina Martin Adams earlier, who covers the markets, and she said, another month of maybe the war and things that I start to rethink how the second half looks in terms of the equity front. We have yet to hear companies taking down their revenue numbers. You raised them for the year. You feel really confident, or is there something out there that says this could change?
You know, we have a no excuse mentality in our company. So we took labor hits, we took supply chain hits, and we still delivered 18% growth on the year and 14% growth on the quarter. So yes, we take those, but at the same time, we have massive addressable market opportunities. We are just moving into the RX, $11 billion RX business. We grew 66% on the quarter. That's all upside, that it really doesn't matter how the market does. That's share capture for us. We have a $30 billion vet business that we're still young in, but we're growing rapidly. Our services grew 22%. So we have such TAM opportunities for us that the market dynamics are something we have to navigate, but we're really masters of our own destiny. If we controlled 60% of the market, I'd really be worried about that, but we have such opportunities ahead of us.
I want to hear more about the vet business and how you plan to grow the vet business, because you call them pet parents. I've been a pet parent. Carol is a pet parent. And we spend, especially when it comes to medical services for animals. How do you grow the insurance business, the vet business?
Vet business? Yeah. So first, last week was...
I'm thinking I wish I had insurance, by the way, for my pet.
So here was the progression of us in the vet business. We did a partnership with a very well-established company called Pathway for a Thrive, joint ventures in our stores. And it worked well. Then we started launching our own vets, and we learned how to operate our own vets.
These are within?
This is only within our pet care centers.
Okay.
So we like the financials of the vet, but we like the financials of the total box even better. We have a 4 to 5 point merchandise sales lift when we put a vet in one of our stores. So we learned how to operate them. So then we got in a conversation with Pathway, and we just culminated a purchase of those joint ventures. So now it's all under one brand, Vetco Total Care. It's all one operational playbook. We have higher throughput in our own veterinaries than in our joint venture vets. So that is a huge, you think about 800 veterinary professionals that just became part of the Petco family last week. That's a huge boost to our system. And what we said is we'll do 70 a year. After that acquisition integration, 70 new vets a year.
That's a lot of growth, and I get where that growth can come from, or that's a lot in terms of initiatives. Just got about 20, 30 seconds here. Is the plan to keep it all together, or as you grow, could you ultimately spin out some businesses?
The explicit strategy is an integrated ecosystem. 54% of customers want a one-stop shop. Petco is the only company that can do it.
All right. I'm going to hold you to it, or we'll check back with you again on that. Always fun to check in with you. Ron, thank you so much. Ron Coughlin, he's the chairman and CEO of Petco here in our studio.
Well, let's get a check of what's going on in markets. We are just shy of half hour away from the close of the U.S. trading. Hey, Charlie.
Well, hello there, from pets to the bulls and the bears. And right now I'm looking at a down day for both the Dow and the S&P. We've got 30 minutes to go. Petco shares, by the way, ticker WOOF. Woof, surging now by 9.3%. S&P's down 8. Down day for the market. As of now, been a volatile, choppy session. We've got the S&P down 0.2%. The Dow down 28. Drop right now of 0.1%. NASDAQ up 31. That is a gain of just about 0.3%. Lots of company news today involving Russia. Amazon's cloud computing unit will stop accepting new customers in Russia or Belarus, becoming the latest company to curb business activities following Russia's invasion of Ukraine. GE will continue to supply healthcare equipment and support, and along with existing power generation operations in the region, as it suspends operations in Russia. Starbucks says it is suspending all business activity in Russia. Right now, a down day with the S&P falling 10, drop right now of just about 0.3%. As I mentioned, we've got NASDAQ higher by 0.2, the Dow down by 0.1. 10-year yield right now 1.85%. Spot gold is higher by just about 2.6%, $2,049 on gold, and West Texas Intermediate crude rallying 4.1%, $124.27 for a barrel of WTI. Well, as for the market backdrop, Victoria Fernandez is chief market strategist at Crossmark Global Investments. She says she is cautious but opportunistic right now.
We've been in the market. We've been trimming names that have been higher. We've been going in and buying names that have taken a hit and have come back, and they've been on our shopping list. And whether that's going to be value names, it's a few tech names. We've been in the market trying to be opportunistic and trade some of these names that are there in order to build our portfolio.
And one more sanctions development. Moments ago, we've got Russia issuing an order saying it will restrict trade in some goods and raw materials in response to sanctions, and says details will follow as to which products will be affected. Again, recapping equities trading mix. 10-year yield, by the way, 1.85%. S&P down 9 right now. That is a drop of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. So we talked about Petco, and we wanted to talk about another company. It's on our radar. We're talking about Apple, because the company's CEO, Tim Cook, and a team of Apple execs hosting the company's Apple's Peak Performance special event today. Virtually.
Virtually. And look, we have to keep in mind that, Apple is a company that traditionally makes big announcements starting in September, Carol.
Yeah.
They're not starting in September. They do it throughout the year. But big announcements usually come in September. That's when we see like the flagship iPhones are announced. Different announcements today.
Yeah, absolutely. They introduced 5G versions of its low-end iPhone SE, an iPad Air tablet, as well as a redesigned Mac desktop computer and faster processor. So let's get to it. Our go-to on Apple, Anurag Rana, he's Senior Analyst of Software and IT Services at Bloomberg Intelligence, one of our go-tos, I should say, when it comes to Apple, on the phone from Chicago. So Anurag, what jumped out at you here, if anything? To be fair.
I would say is, frankly speaking, these events really don't move the needle as much as you said. There is a lot of good features, a lot of upgrades on technology, the chip and the 5G. All of those things are critical, but these are all iterative, or I would say gradual improvements on the product. Mm-hmm. It's not as if none of these would, force anybody to just jump out of the seat and go and, buy a new phone. But as the natural progression goes, people do wait for the next iteration of the phone to come in, and they come in and they upgrade. It's just, it's a step-up function for a lot of these products.
What about the updated version of the iPhone SE? This is the entry-level iPhone, the lower-priced version of the iPhone. It was $399. This one will go to $429. Does that get more people around the world who perhaps used Android into Apple's ecosystem? So, for lack of a better term, Apple can kind of sink their claws into them and get those recurring payments. And I mean that in the nicest way possible.
That was a visual.
Yeah.
Yeah. I completely agree with you. This is the phone that really is, I would say, the mid-end market where Apple has a very small market share because, people who can afford the Apple expensive one, they probably have it. Apple has a very high market share in that area. But in the mid-end phones, it has only a 10% market share. And although it didn't happen, I was hoping that they would reduce the price of this phone and gain more market share. But Apple's ethos is they really care less about the market share. They're more about their margins. And the price actually went up. So, mathematically or financially, I don't think it makes a whole lot of, difference. Once again, people who were waiting to upgrade their older iPhones will go out and buy this new one because it's a very, very capable phone with good features in terms of what it can do. But I don't think it expands their market share to a level where I would have wanted it.
Yeah, I was pretty surprised to see the price, actually. I actually thought it would drop, just like you did, Anurag, so they could start to get more of those Android customers. What about the iPad Air? $600 for the iPad Air with the M1 chip. How should we be thinking about the M1 chip? Why is that important?
The chip is actually very important because, believe it or not, that it's helping Macs replace a fair amount of high-end PCs and gain market share. Now, this is something that they developed themselves, and the feedback from the analyst community, because they did launch an older version of this chip before, has been very positive. So I think, when it comes to PCs and again, iPads, as you rightly mentioned, this chip has the ability to help them gain more market share down the road as well.
What jumped out for me is Tim Cook announcing plans to bring Major League Baseball games to the company's TV Plus streaming service. I think about that. Tim and I were on the West Coast ahead of the Super Bowl. We were talking with people all in the world of professional sports, particularly football related, because it was the Super Bowl. But, you know, one of the conversations I had was with the head of ESPN and, you know, about, and also with Amazon's content acquirer, just about, it's all about content and getting it out there and also acquiring it on all these platforms. And I do think about, you know, what Tim Cook is thinking about building that out, especially when it comes to the sports universe, which can be incredibly lucrative.
I think it's not, I mean, I completely agree with you. Sports is one, you know, your own content is one, movies is one, your own shows is one. All of these things are there to take away slowly share in the advertising market down the road. Not to mention, you know, your people who use the bundled services or the Apple services. Because remember, services are becoming a bigger and bigger, you know, piece of Apple's overall pie. And every dollar that they earn in services has a much higher gross margin. It has 70% gross margin compared to products, which has closer to a 40% gross margin. So, you know, from Apple's point of view, actually it's slightly lower than that in the 30s. If you see from an Apple's point of view, the more services that they can sell you, the better it is for them and the finances.
Yeah, I'm just looking at the product segment breakdown on the Bloomberg for 2021 revenue. Products about $297 billion. Average 3-year growth was 9.6%. Services $68.4 billion, but the growth was almost 20% over the 3-year growth.
This is, Carol, why people are talking about Apple as a haven or a safe haven right now.
Well, isn't it funny, Anurag, like, you know, how many times people are so quick to turn their back on some of these high-tech flyers or even an Apple, and yet here they are.
Yeah, I mean, the install base doesn't change. I think I've always wondered why so much volatility with Apple, because, you know, the average life of an iPhone, let's say for the sake of argument, is 3.5, 4 years. So you know the person is going to upgrade. Whether they upgrade right now, 6 months, a year from now, what difference does it make? But I'm still using the services on a daily basis. You know, whether it's storage, whether it's Apple Care, whether all the other things that come with it, that's really, you know, I get recurring revenue for that.
Yeah, I mean, I think about, I know we as a family are very embedded in the Apple system. And so when it comes... So when it comes to buying something new, it is. You're just like, okay, it's another Apple product. Anurag, thank you. We love our Anurag Rana. He's Senior Analyst of Software and IT Services at Bloomberg Intelligence. Shares of Apple, though, down a little bit so far in today's trade, and we're seeing the stock down about 11% so far this year.
All right, well, let's head to Washington, D.C. from Chicago for a check of the latest world and national news. Nancy Lyons. Hey, Nance.
Hey, Tim. President Biden is amping up the pressure on Russian President Vladimir Putin and announcing a ban on Russian fossil fuels, including oil. Bloomberg's Irv Chapman reports.
The president said Putin's war has added 70 cents to the cost of a gallon of gas, and he cautioned this action would likely add still more.
We're banning all imports of Russian oil and gas and energy. That means Russian oil will no longer be acceptable at U.S. ports, and the American people will deal another powerful blow to Putin's war machine. We're moving forward with this ban, understanding that many of our European allies and partners may not be in a position to join us.
Russia threatened to cut off Europe from natural gas if its governments joined the embargo. And Europe, the president noted, is much more dependent on imported energy than the United States is. In Washington, Irv Chapman, Bloomberg Radio.
U.S. intelligence officials say Putin seriously miscalculated this war. CIA Director William Burns told lawmakers on the House Intelligence Committee today that the Russian leader never calculated the losses of equipment and soldiers he's now facing.
Putin has commented privately and publicly over the years that he doesn't believe Ukraine's a real country. He's dead wrong about that. Real countries fight back. And that's what the Ukrainians have done quite heroically over the last 12 days.
Burns says Putin thought he had modernized his military and it was capable of a quick victory. But he says those assumptions were profoundly flawed, and Burns says he expects Putin to double down since he has no real political endgame. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So Carol Massar, Tim Stanovec here, and this story definitely popped up on my radar. I know on Tim's too. It's buyer Lou Wang. We're going to take it slowly so that it makes sense to you. The headline is buy and hold is lost to every single chart model in 2022. Yeah. So if an idea of how difficult 2022 has been for patient investors, consider this. Buying and holding stocks has done worse as a strategy than literally every chart-based trading model in Bloomberg's technical analysis library.
Okay, so if you heeded the directional movement indicator, bought on fear and sold on greed, or took signals from an exponential moving average, you actually did better than doing nothing, backtesting data show. Buy and hold is down more than 10%, losing to 22 technical analysis systems, 12 of which delivered positive returns.
Demand for what?
We need Abigail Doolittle.
This is the kind of stuff that, and I like this kind of stuff, but it hurts my brain. Well, demand for any kind of edge has grown as volatility ramped in 2022 stock market. Wild intraday reversals, you know this, are piling up as traders struggle to get a handful on the future path of interest rates and the economy, with the war in Ukraine sparking a rally in commodities and complicating the Fed's calculus on monetary policy.
Okay, so before getting too enamored of the charts, Carol, realize that any methodology that kept someone out of the market at all this year or helped them miss the big down days was destined to do well compared with riding the S&P 500 index to the bottom. Beating a market in free fall isn't hard. You just don't have to have any money in there. And equities have dropped on many more days than they've risen so far this year. Too bad you can't see the future.
So
if you did, you'd be so rich.
You and I talk about this, though. We had a tremendous run in 2021.
Yeah.
So the logical side of my brain, I don't know whether that's right or left, but would say take some money off the table
Connection
and let's see what
lost.
happens in the new year. Because
Now-
there were a fair amount of
back
questions.
in.
Yeah. We heard everybody talking about more volatility. We've certainly seen it play out, not necessarily coming from where we thought, but it's interesting to hear this.
Check out this article by Lou Wang on the Bloomberg Terminal. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. This headline from the Bloomberg Professional Service. Coca-Cola suspending business in Russia. This follows word this afternoon that PepsiCo is exploring options for its Russian business, according to the Wall Street Journal. Right now, shares of Coca-Cola Company are lower by 3.7%. PepsiCo shares down by 2.5%. It has been a volatile day for the U.S. stock market. Lots of announcements, similar announcements coming from the likes of General Electric and Starbucks, also Amazon Web Services. Right now, we have got the S&P down 18, dropped now of 0.5%. The Dow is tumbling 112, lower by 0.3%. NASDAQ just turning negative. The NASDAQ Composite Index now down by 6 points, a drop there of just about 0.1%. So the Dow, the S&P, and now NASDAQ all trading lower. Stocks have been whipsawed today. Volatility continues to grip global financial markets. 10-year down 23.30 seconds. 10-year yield right now 1.85%. Gold surging 2.7%, now at $2,051 on the precious metal. And West Texas Intermediate crude, volatile day there. WTI up 4%, 124.18 a barrel. Brent up 4.2%, 128.38 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Across the U.S., state and local officials have been putting forth high-profile plans to accept taxes in Bitcoin. Meanwhile, the mayors of 2 major American cities have taken their salaries in cryptocurrencies. One can't help but appreciate the irony of officials rushing to embrace crypto, a movement originally aimed at obviating the need for central authorities. To be fair, the hype surrounding blockchain technology isn't entirely unjustified. Properly regulated, digital currencies could potentially make the financial system more resilient. But the state and local initiatives at issue seem mostly concerned with generating publicity and latching on to the current crypto frenzy. That said, there's nothing wrong with a bit of experimentation if it doesn't harm anyone and might induce some innovation. Just don't mistake it for the legitimization of a technology that still has a long way to go. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 minutes left in today's trading session. That means it is time for the Drive to the Close. And with us is Stephanie Pierce. She's CEO of Dreyfus Mellon and ETFs at BNY Mellon Investment Management. And she's on the phone from Boston. This in what has been another volatile day with big swings, whether it's crude oil, whether it's the S&P 500, or whether it's the NASDAQ. We continue to see a lot of volatility. Stephanie, great to have you here. The market environment, it is a tough one to call. How do you make calls, though, for your investors in this environment, and where do you go?
Sure, it is a difficult environment. And for me and our team sitting in the index and cash businesses, we are really at the tip of the spear of some of the changes that are taking place. Just as an example, we've seen in the index space, most of the major index providers have started the process or ended the process of removing Russian securities from their benchmarks altogether and have reclassified the region from an emerging market to a, quote, unclassified status. So as you think about what that means in terms of what we need to do for clients and in portfolios to make those adjustments, it's tricky. These are tricky times, right? Similarly, in the cash markets, we're seeing a lot of clients allocating and moving cash around, and we just have to work with them. One of the things that, we are very proud of is we have a lot of tenure in our team, and we, are very comfortable making these moves in these volatile markets. As you said, these are tricky times.
Well, it's interesting, and I love that you say that there's a lot of tenure out there, because I do think about there's a point where we need to draw on people who've seen erratic market cycles, right? And there's a fair amount of us who've seen the ups and downs of the markets, different stress points, geopolitical or otherwise. I do wonder, though, how do you look at Russia? I'm trying to assess for our audience that when a Coca-Cola or McDonald's says we're temporarily closing something down, or when MSCI, talks about removing Russia from indices, is this something that's a longer-term play here, or a longer-term thing that we as investors need to consider? It's not something that maybe changes again in another month or 6 months.
Look, I think, the truth is nobody knows the answer to that question.
So it could flip. So are you saying, though, that it could flip quickly if this situation, if this war, stops?
Look, I think index vendors have a responsibility to be prudent in the changes that they make, which are typically based on a set of rules, and they are going to follow those rules, and that's what we're seeing. It took a week or so for that to occur, but we're now seeing them follow, the rules and I think that if things were to change again, that whether it be Russia or any other country or any other segment of the market, they would follow those rules. And that's, I think, what gives investors that work with us and that we invest for, comfort in, passive management, is that there is a set of rules. There are, human beings making those rules, and it is understandable and transparent. So from that perspective, I don't think this is something that changes quickly and overnight. But if it does, it would be based on a set of rules that are explainable and understandable to our clients.
Stephanie, what are you hearing from your clients right now? Are they actually reaching out about the war, about Russia's invasion of Ukraine? Do they want to make sure that they don't have money invested in Russia? What are you hearing from them?
Sure. We absolutely are well engaged with our clients. As an interesting anecdote, one of the things that we have talked to them about is, if you look at the ETF portfolios that we manage, we've seen not dissimilar from the March 2020 market sell-off, that ETFs have once again proved to be a source of price discovery and liquidity for investors during this event, where the underlying securities were either not trading or were delisting or things like that. And so for investors in emerging market strategies, particularly in ETFs, we've seen the vehicles continue to trade on the U.S. exchange while some of the underlying Russian markets and securities have not been liquid. So that's a conversation that we continue to have with ETF investors that we work with, to understand that what was once seen as kind of a flaw of the vehicle, meaning discounts and premia on these vehicles, that it's actually a feature, right? That it may be the only place you can find liquidity and understand where prices will settle out is in the ETF vehicle, when some of the underlying markets and securities are not particularly liquid.
Speaking at kind of the world being at crossroads over a lot of stuff right now, and certainly the investing world as we watch that Russian invasion of Ukraine, ESG finding itself at crossroads after investing in Putin's Russia. This was the headline of a story. Basically, sustainable funds are holding Russian bonds as well as shares of companies like state-run Gazprom. It's kind of a moment of reckoning where we are increasingly seeing ESG being looked at as like, wait, is it really ESG? And I think about some of the work you guys are doing also when it comes to diversity and inclusivity. Millen's Pathway, Inclusive Investment Study, that looks at men investing, women investing. On this International Women's Day, what are you guys finding?
It is a fascinating topic. And I would say one thing, we have just published probably one of the most expansive global studies on women investment behaviors, and particularly why women do not invest at the same rate as men. And if I could offer you one conclusion, it is that now is absolutely the time to create a more inclusive investment world for generations today and generations to come. In this report, we found that if women were to invest at the same rate as men, it could result in an additional $3.2 trillion of capital being invested globally, much of which would, as you said, flow toward investments with a positive impact on society and the environment, which is really the proclivity or way in which women like to invest. And so the 8,000 women and men that we surveyed, we found that over 70% of the women under 30 said they would invest in companies that reflected their personal values. And over half of the women we surveyed said they would invest if there was a clear purpose for good. So I think the takeaway is women want to invest both for financial return, where they can do well, but also by doing good.
So how do you get more women to invest? And we just have 30 seconds left.
Sure. Very quickly, we found 3 hurdles to doing that. One is women feel that they need a very high level of disposable income to start investing. In the U.S., that was $6,000 a month or $72,000 a year. The second is that, and related to the first, is that women see investing as inherently high risk, and very few women see themselves as high risk takers. And then the third, and which is probably related to the first two, is the way the industry engages with women probably needs some change. And that is really our call to action today. Most asset managers gear their product solutions and the benefits they talk about toward men as their customers. And that was part of the survey. And so our call to action is both we as an investment management firm and everybody else out there really needs to start to change the way we engage the products and services we offer and how we talk about them to women.
Know your audience, know your complete audience that's out there or your potential customers. Stephanie Pierce, thank you so much. Chief Executive Officer of Dreyfus Mellon and ETFs at BNY Mellon Investment Management on the phone from Boston. We're just a few minutes away from the close. It is time for our cross-platform coverage. Beyond the Bell, live on radio, TV, and YouTube. We're counting you down to the close on this Tuesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast. Carol Massar, Tim Stenovic. We welcome in our audiences across Bloomberg Television, radio, and YouTube to really parse what, Carol, is going to look like another really volatile day. I mean, we basically opened unchanged on the S&P. We moved lower early, and then you had that huge bid come in around lunchtime that sent us up almost 2%, and right now we're back in the red, down about 0.7%.
Yeah, it feels like several different market days all in one day. I'm just looking at the swings. 4% swing on the NASDAQ 100, about a 3% swing on the S&P from peak to trough. And take a look at some of the commodities. WTI, a 10.5% swing. I mean, Tim, it has been all over the place.
Yeah, investors couldn't make up their minds whether to buy or sell. The S&P 500 moved between gains and losses at least 9 times so far today.
The whipsaw continues. I'm looking at volumes, significant. 42% higher on the S&P 500 versus your 20-day average, 50% higher on the Dow. Whatever people are doing, they're doing it in spades and they're coming to trade.
And it seems just the volatility that we talked not only about the equity market, but when you go across asset, we talked a lot for our radio audience here on TV about renewed dollar strength, the likes of which you haven't seen in almost 2 years, and remains sort of this yields higher. We're back up now on a 2-year yield to 162. So we've surpassed where we were pretty much a month ago, going back to what I think December 2019 levels.
And of course, a lot of this ties into the commodity space here. Of course, the surge that we saw earlier today in WTI crude, which flirted with $130 a barrel. Because one point you saw wheat at a record high, and of course, just an absolutely stunning day for nickel here, more than doubling at one point to $100,000 a ton before the LME decided to suspend trading and nullify most of those trades and basically shut down until at least March 11th in order to sort everything out. Let's sort out what's happening here in the equity markets. Here in the United States, the Dow Jones Industrial Average down about 0.6% on the day, or 186 points. The S&P going to close lower by about 0.7% or 30 points. Remember, this is after being higher by about 1.8% here on the day. As far as the NASDAQ composite, another interesting day for the NASDAQ. Is going to finish the lower only by about 0.3%, but it was higher by about 2.5% on the day. And the outperformer on the day, at least on a relative basis here, remains the Russell 2000. The Russell 2000 had held in the green for a good portion of the day. It opened in the green, it stayed in the green. It was as high as 2.7% here on the day, but it's going to finish the day closing up about 0.6%.
Yeah, number one performer in the S&P 500, Enphase Energy. That is a name that we have talked about a lot over the last couple of weeks. Still down on the year, but again, another big bump. A lot of those energy names continuing to see momentum, Taylor.
Oh, Carol, don't steal my thunder. Because that is what I've been talking about. It's unbelievable. The energy sector, Carol, it's a 40% year to date. Now, that's on sort of when we think about just the immediate sub-levels of where we are in the S&P. Here I show you for our radio audience, as we do every day, the winners and the losers going down an additional level on that. The energy sector, it's still up an additional 1.4% on the day. Just unbelievable. Followed by, what, semiconductors and some of the auto components as well. As you're thinking about the the ramifications of potentially all of these maybe further chip shortages and higher input costs coming down on the horizon. Take a look at where we are on the bottom, on the right of the screen. Otherwise, Carol, it actually looks pretty defensive. That's the rotation out. It's household products, it's food and beverage, it's household equipment products. You're really seeing with some of these hardware and some of these costs that are coming in, that's what's weighing on this portion of the market. You're off about 3% or so.
All right, in terms of gainers in today's session, I do want to talk about some of the airline names and travel stocks. We did see some bounce backs thanks to some updates from Alaska Air and Booking.com that were better than what investors were anticipating. I'm just going to single out one, Alaska Air Group. They were up about 6.8%. They do expect capacity to be down in the first half of this year because of those rising fuel costs, but they also say they continue to see strong demand for spring break and summer travel. They still expect to return to its full pre-pandemic levels of capacity this summer. So a little bit of a blip higher there. I had to talk about U.S. Well Services. I feel like this is a romaine type of stock. Microcap oil and services company. It's on pace or was on pace for its 7th gain. This stock was up as much as 90%.
You almost had me.
Hey, listen, a few minutes ago, or was it like 20 minutes ago, it was up higher. There was so much volatility.
Blinking, you miss in this market.
12% of it, the float is shorted. Maybe that explains some of the profit, the volatility.
But I'm glad you bring it up. I mean, because all its peers, NVO, they're still higher on the day. I mean, everyone's speculating now that there's got to be some increase in U.S. Crude production at some point.
Yeah, and I just want to mention exactly, right? We've seen investors moving into the space because of what's been going on in the energy markets. Do want to mention Wolf, Petco Health and Wellness was up about 8%.
Hey, we interviewed them earlier.
Yeah, we did too.
Yeah.
Carol, do you know we have a new mascot on our program?
What's your new mascot?
Yenzi,
not my
Romaine's new dog.
Really?
Co-mascot.
Yeah, apparently they're really cheap at the moment, dogs, and all their food. I've heard the inflationary pressure is minimal there.
Yeah, supply and demand.
Well, all I know is we're all spending a lot on our pups because they did well for the last quarter, and they also raised their outlook for the year. It's time for Tim to get another pet.
Yeah, it is.
No, it's not. He has a child. We've decided that already.
Exactly.
Too much.
Caroline knows what I'm talking about. Let's talk about some of the decliners today. Consumer staples, as we mentioned, under pressure today as oil prices climbed, wheat prices bounced all over the place, food input costs go up. ConAgra, the second worst performer in the S&P 500 on a percentage basis. Romaine, you took us through a little earlier on why it was lower. Also downgraded to equal weight from overweight at Consumer Edge, citing those rising food and input cost volatility.
ConAgra,
it is,
Campbell
Soup.
McCormick. You go through the biggest decliners today. General Mills, all in that space.
Yeah, look, it absolutely makes sense as those input costs go up and the company sees margin pressure. And also, what kind of pricing power do they have in terms of for consumers? I wanted to check in on Mandiant because Google did say today that it would buy the company for $5.4 billion. But this was priced into the stock yesterday. We saw shares rise 16% after the information reported that this deal was going to happen. Still, though, down about 2% on the day today. And Apple, keeping an eye on Apple, down by 1.2%. The Peak Performance Special Event, the virtual event, happened today. A couple new products, no big surprises. An upgrade to the iPhone SE, the M1 chip in there.
Did you call that a snooze?
I didn't say snooze.
Okay.
I think you heard it though, because maybe that's what you thought. Yeah. But you know, when Mark Gurman is one of your colleagues, there are no surprises at Apple events anymore.
That's true.
So true. And also how to make headlines in this particular market at the moment. I mean, we saw all the women ringing the bell at the close, International Women's Day, we wear our ribbons, but really we've been talking about much more what's confronting the market right here, right now. But we need credit where credit's due. This is International Women's Day. There was an Apple announcement. There is other things going on under the hood. But I take you back to what is just front and center for everyone, the volatility in the commodities space, the fact that Russia and Ukraine is just upending our view on where global growth is going to be going and where supply chains are going to be the headaches. Gas oil up 20% on the day, heating oil up some 13%. Here is where the impact is for the consumer. Here is where the Federal Reserve, the ECB, as soon as this week, they're going to have to weigh in. Brent crude grinds higher, 5% higher, $128. WTI crude, $125, let's call it, up another 4.6% as we know that the US makes that stance, works with the United Kingdom to put a ban on Russian energy. I look across to not even there are the soft commodity stories, which of course we've got to talk about what's happening with wheat. We've also got to talk about what happened with gold, the flight to a safety, then stagflation hedge, not to mention what happened with nickel. And I'm looking at an FX market that actually saw the euro up 0.5%. Big story. Again, we hardly had time to pay attention to it. But the fact that the EU are going to be jointly spending, once again, issuing debt to be able to strengthen up their overall economy, to be able to spend more on defense. And I'm looking at a search for safety, no more in the bond market. Yields push higher in Germany, Austria, Netherlands, and the like.
Yeah, as the trickle effects come out, more companies, Bumble the latest, saying they're discontinuing their operations in Russia. We'd mentioned this earlier. Sorry to throw the control room off guard, that Russia and Ukraine was about 3 to 4% of some of their revenue. So that is, of course, sort of the backdrop of this story here, which is yields higher, which, take a look at this. You know, we're back up to about a 161, Tim, on 2-year yields, up 6 basis points. We're going back to the highs that we had way before a month ago, way before COVID, December 2019 levels. So you're really starting to get all of these inflation break-evens at record highs. Yields are following higher.
Yeah, I want to go back to Bumble. I'm keeping an eye on shares of Bumble. It's moving in after hours higher by about 5.5%. A lot of the Russia risk was priced in recent days, as analysts have pointed out, that the company's ownership of Baidu represents a risk to the company's top line and bottom line as well. The company did say it's removing apps from the Apple Google stores in Russia and Belarus. The company, though, did say it sees fiscal year 2022 adjusted EBITDA margin of 26.5 to 27%. The company sees revenue for 2022 between $934 to $944 million. Estimates were for $939.2 million. First quarter revenue forecast missing those estimates. I got to tell you, though, Bumble shares under serious pressure since the company went public, down about 80% from record highs about a year ago.
All right, I'm calling an audible. Sorry, I'm going to add on to Taylor saying, sorry, control room, because Stitch Fix is also down almost 19% here in the after hours. This company coming out with their earnings as well. Third quarter adjusted EBITDA loss. They're talking about the outlook, 25 to 30 million. That looks like a smaller loss. Third quarter net revenue, 45 to 500. That is a light number. So that stock certainly seeing a bunch of selling in the after hours. It hit a 52-week low in today's session, and it was down 42% prior to this release, Taylor.
And I'll do a little correction. I'd said that analysts had been looking at top line revenue from Ukraine and Russia to be about 3 to 4%. We are now hearing from Bumble that total revenue from Russia, Ukraine, and Belarus was about 2.8% in 2021. So relatively small, but that's starting to put some numbers as we think about other big companies as well, like Pepsi, like Coca-Cola, et cetera, Tim, to really understand how this is going to weigh not only on the income statement, but also the balance sheet as well if you're looking at some write-downs.
There's also the risk to employees, though, and the engineers that the company has based in Russia and Belarus and other areas of that world, and the disruption that's caused by this terrible war.
That is what we're going to be talking about exactly on our Triple Take today. Great to be able to tune in on what is a focus on the human cost here, and also some of the talent that we were so used to depending upon from Ukraine, from Russia.
Yeah, we learned so much, right, as a result of this, how much we rely on Ukraine and Russia as well. All right, that's going to do it. You guys are going to continue on Triple Take. That will do it, though, for our cross-platform coverage on radio and TV and YouTube. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey there, Nance.
Thanks, Tim. Russia's Vladimir Putin is determined to dominate and control Ukraine. That was a testimony today from CIA Director William Burns to the House Intelligence Committee.
He's been stewing in a combustible combination of grievance and ambition for many years. That personal conviction matters more than ever in the Russian system. He's created a system in which his own circle of advisors is narrower and narrower. COVID has made that even narrower.
William Burns says it's obvious that Putin miscalculated the effectiveness of his military and the strength of Ukraine. President Biden says the U.S. has initiated a full-on ban on Russian oil and gas as Russian forces continue the offensive. The president says the U.S. will no longer accept shipments of Russian oil or gas in any of its ports.
This is a move that has strong bipartisan support in the Congress and I believe in the country. Americans have rallied to support their Ukrainian people and made it clear we will not be part of subsidizing Putin's war.
Biden warns Americans will feel the effects at the gas pump. The move does follow pleas by President Volodymyr Zelensky to the U.S. and Western officials to cut off the imports. Energy exports have kept a steady influx of cash flowing into Russia, despite otherwise severe restrictions on its financial sector. Green Bay quarterback Aaron Rodgers is staying with the Packers. He tweeted that news today. It's been reported the 4-year deal could be for as much as $200 million. The AP is also reporting Seattle quarterback Russell Wilson is being traded to the Denver Broncos. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nancy, thank you so much. Carol Massar, Tim Stenivek here in our Bloomberg Interactive Broker studio. Just want to rehash some earnings that just crossed. We're at the end of earnings season, but there's still companies
It's almost time for the
reporting.
next earnings season. No, it's not
Which
quite,
I kind
but,
of,
you know.
Well, based on what we heard from Gina Martin Adams saying that so far we have not seen analysts reducing the revenue estimates for the second and third quarter. She says we need to watch this. The revenue forecasts are still getting higher. And she was putting this in the context of how long the war goes on in Ukraine and the disruption really to the financial markets and the outlook here. And she says maybe it's a month or so before we start to rethink that recovery in the second half. So with that in mind, earnings, Bumble and Bumble, that stock's up now 15% in the after hours.
It is, but it was coming from a place near record lows, down about 80% after the company's highs about a year ago. The company sees 2022 revenue between $934 million to $944 million, so it met estimates there. One of the challenges for the company, though, was that its exposure to Russia through Baidu,
Right.
the app that it owns, and also the engineering talent that it has in that part of the world and the disruption to the app. The company did say that it is removing apps from Apple, Google stores in Russia and Belarus. The company also said it's discontinuing operations in Russia. The company did slightly miss when it came to fourth quarter paying users. That came in just a teeny bit light. Estimates were for 3 million. The company said it had 2.98 million.
All right, so Bumble is up about 14%. Stitch Fix is down now about 20%. It's already down more than, I think, 40% so far in 2022. Company coming out with its latest quarterly update. Second quarter net revenue, that was a slight beat. Second quarter loss per share, 28 cents versus an estimated loss of 27 cents. So that came in better than expected. The forecast, though, third quarter net revenue, 485 million to 500 million. That is light. The estimate out on the street is 560.4 million. Third quarter adjusted EBITDA, they're looking for a loss of 25 to 30 million. That is more than the estimated loss of 6.38 million. So there's disappointment really about the outlook. All right, you are listening to Bloomberg Business Week. Carol Massar, Tim Stenivek, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A better-than-expected revenue forecast out of Bumble. That's one of those online dating apps. Shares after hours up now by 18.9%. Stitch Fix shares tumbling in extended trading after the personal styling company reported its second quarter results. The Dow, the S&P, NASDAQ all declined today. Volatile session, big swings between gains and losses. Evidence, at one point the Dow was up 585. It ended with a loss of 184. The S&P 500 index lower by 30 today, spent part of the day midday in the green, moved lower final hour. S&P down by 0.7%. NASDAQ down 35 today, dropped there just about 0.3%. Key takeaway here, stocks lower on a day that was whipsawed by the war in Ukraine as volatility continues to grip global financial markets. 10-year down 21/30 seconds, 10-year yield 1.84%. Spot gold up 2.6%. 2,050 right now. Big move for gold today, up 51.95 the ounce. West Texas Intermediate crude up 4.4%, 124.64 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Bloomberg and Business Week often highlight the global wellness market. Our pursuits team covering it regularly, whether it's products, services, treatments, places to go. It is a massive market. Some have pegged it at about $1.5 trillion, and investors are definitely noticing, and that includes our next guest. It's great to have on with us Ellie Rubenstein. She is co-founder and CEO of Manatree. It's a private equity firm. It invests in the wellness area. Her name, if it sounds familiar, it should. Her dad, well known in the financial space, and he is a Bloomberg contributor on radio and TV, David Rubenstein. He's also been a guest on our broadcast. And Ellie joins us via Zoom from San Antonio, Texas. Ellie, so good to have you here with Tim and myself. How are you?
Thank you so much for having me. I'm doing wonderful. I appreciate you having me on.
Well, it's great to have you on. This is definitely a space that we spend an awful lot of time, certainly at Business Week, talking a lot about because there's a lot of money going into it. Tell us about your background. You grew up in Alaska. You spent a lot of time, it sounds like, in the great outdoors. How did that shape you in thinking about where you wanted to focus kind of your investing time on?
For sure. So I think one of the things I always tell people is you learn more from your failures or you learn more from what your passions are. And so I spent the last 10 years starting my career actually focused within the seafood markets or within water. And we kind of have a running joke in my family. My father eventually said, do you have to source all your own food? I was a hunter fisherman. He said, can't you go buy a seafood or a beef company? Dad, it's not that simple. But in our family, usually when someone says what you can't do, that motivates me. So that was the emphasis for it. Married with a very strong emphasis on culture of where I wanted to live, how I wanted to live, and really the people that surrounded myself with. So that was why I decided to go and start my own firm. I would say that I did step out of my family in that I did move to Vail at a young age and be a professional ski racer. And, while I might have gone east for college at Harvard, I put my foot down again and said, Dad, I love you. I appreciate the support and the advice, but I'm not going to go back to Harvard for grad school. And so I feel like I started to become my own person when I took charge of my life. And for me, that meant the decision of going to Purdue and receiving my double master's, my master's in ag econ and my MBA in food and agribusiness. And why that matters was I wrote my essay on my passion for sourcing food, smoking my own food, and really taking charge of the health aspect when you control your own supply chain. I did not anticipate Manatree would become as big as it did, but that was really where it came from, was what I didn't enjoy doing.
We got to ask you, for our folks, you're obviously on Bloomberg Radio, but you're also on YouTube right now. Where are you? Because it looks like you're in a lot. Your skis are behind you. We can see.
Carol,
where are
this
you?
is the magic of Zoom, Carol. Where have you been?
I get called out on it. So I am, for my job, on the road a lot. So I am today in Texas, where I've been spending the winter for work. So that is the background of my office in Vail. But today being Women's Day, I've got a special women's dinner with some of our women investors in Texas. So we put that background up. I think it's a little too sunny in Texas. The natural lighting, I don't think would work on this. So as if I'm in Vail and still around snow, there's my background.
Well said.
I love it. Hey, Ellie, I want to talk a little bit about where you're putting your money right now. I mean, there's probably not a better time to talk about it because we're talking so much about rising commodity costs, rising food costs around the world, much of the world being cut off because of Russia's invasion of Ukraine from so much grain. So we talk a lot about commodity prices, and I'm wondering how we should be thinking about diversifying when it comes to where we're getting our food, how we can be sustainable when it comes to food supply, because there is so much out there that can disrupt it.
Yeah, this is one of the reasons why I think that degree from Purdue of Ag Econ is one of the best degrees, because it's really a macroeconomic of the global food supply chain. So when we started Manitree, it was an anomaly at the time to say we are a firm focused on the global food supply chain. And what that means is it allows you to manage two risks. Number one, the supply chain, and number two, the geopolitical risk. So I think a couple of areas that we tend to focus on would be, number one, globalization to localization. Number two, companies disrupting the supply chain logistics. And then number three, clean protein and how that can be a hedge against some commodities. So a couple examples of that: globalization and localization. Gotham Greens is an indoor ag company. It is the leader in this space.
We know it in New York City.
We've actually had the founder on.
Viraj.
Yeah, go with it. Yep.
Talk about a dynamic CEO. So, this is an area that I'm not sure we would have ever invested in, but what they have is an impressive model that cuts that supply chain down in half. And usually a leafy green takes about a week to reach the grocery store, right? But instead, they cut that in half, which allows it to stay on the shelf in the grocery store 2 times as much. It's also focused on in areas, so while it's in New York, let's be clear, it's in Brooklyn. They tend to locate in food deserts, right? And so they have a very unique algorithm. Instead of looking at population, it's looking at where can they help get people leafy green. I'm a huge fan of this. And of course, it's great for the environment. It cuts down, and it's a very big proponent of ESG. But I think that they're really changing the game in terms of farming. And so that would be one area.
Hey, wait. Hang on for a second, because we're going to have to do a little bit of news.
Sure.
And we'll take a break and come back and talk some more, because we want to hear where else you are investing in.
Sure.
Sounds like, too, you would want to listen to or check out a company called App Harvest. It's somebody we have had on who is very much involved in this space in terms of local food production and figuring out how to reduce the impact on the climate, as well as doing it cleaner. Ellie, we're going to come back to you. Ellie Rubenstein, she's co-founder, chief executive officer of Manitree, via Zoom from San Antonio. We'll continue with her.
Big history in Vail, too. We never crossed paths there, even though I lived there right after college for years. We'll talk about that, too. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. It is Bloomberg Business Week on this Tuesday, International Women's Day. We're going to get back to our conversation with Ellie Rubenstein. She's co-founder, chief executive officer of Manitree. We'll continue in just a moment, making wellness investing. So we want to get an idea of how she picks and chooses.
Yeah, looking forward to more of that conversation in just a few minutes. First, though, let's get a check of everything happening after hours. Lots of earnings, also market moves today. Hey there, Charlie Pellet.
Hey, you covered it all, Tim. Here's what's going on. Got to begin with Stitch Fix. That stock now tumbling roughly 19% in extended trading after the personal styling company reported its second quarter results. It gave a third quarter forecast that was weaker than the consensus view. Again, we've got shares down now by just about 18% on SFIX Stitch Fix. Bumble soaring 16% post-market after the dating app maker forecast revenue for 2022 of $934 million to $944 million. Again, Bumble shares, they are moving higher after hours. From dating to breaking up, PepsiCo suspending the sale of its soft drinks and global beverage brands in Russia following the nation's invasion of Ukraine. Coca-Cola suspending its business in Russia. Starbucks says its license partner has agreed to immediately pause operations at all 130 of its stores in Russia. Turned out to be a down day as volatility continued to grip global financial markets. Stocks and oil swinging wildly today on headlines relating to the war in Ukraine. Stephanie Pierce is the CEO of Dreyfus Mellon and ETFs at BNY Mellon Investment Management. She talked about the market backdrop and what it's like trying to trade right here on Bloomberg Business Week.
Major index providers have started the process or ended the process of removing Russian securities from their benchmarks altogether and have reclassified the region from an emerging market to a, quote, unclassified status. So as you think about what that means in terms of what we need to do for clients and in portfolios to make those adjustments, it's tricky. These are tricky.
And again, turned out to be a volatile day on Wall Street with the S&P tumbling 30 points, down 0.7%. Keep in mind that at the best level of the day, we have the S&P up 75 points today, up by 1.8%. But to be clear, ended with a loss of 0.7%. The Dow down 184, lower by 0.6%. At one point, the Dow was up 585. Nasdaq lower today by 0.3%. 10-year yield 1.83%. Spot gold up 2.7%. 2052 on spot gold. Crude, big story today, big moves there. WTI, West Texas Intermediate up 4.3%, 124.50 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. I want to get right back to our guest that we've been speaking to, Ellie Rubenstein, the co-founder and CEO of Manitree. She joins us via Zoom from San Antonio, Texas. We should note that Ellie is the daughter of our colleague here at Bloomberg, David Rubenstein. He's a Bloomberg contributor, and Manitree is a private equity firm and invests in companies that improve human health through nutrition. That's what we were talking about before the break, Ellie. I want to talk more about that and get an understanding of how you find the next company to invest in. What's your due diligence process? How do companies get on your radar? And how do you decide to say yes to a company?
Sure. I want to first point out, I think one of our advantages has actually been our diverse leadership. So if you look at only 15% of women PE managers, at Manitree, 70% of us are diverse leadership. And why that matters is that in our portfolio companies, there is 40% that's either CEOs or co-founders that are women. And so when we're trying to attract companies that either need female perspective on their boards or female founder, that really matters. So a couple of themes that we've looked at, we talked about supply chain. There's one called Cheetah Logistics, which is a female founded CEO. And so that is an Amazon-like supply chain disruption company that assists restaurants with kind of on the go and healthier options for restaurants. Another one that I would love to emphasize is Evolve. It's in the infant gut probiotic space. And so our managing director is actually the only women on the board. So I think what we've always tried to look for is four things. I would say, where can we add creativity? Where can we lead with conviction? Where can we provide confidence? And also our culture. If you visit us in Vail, Colorado, at our office, we have team workouts, we have a kitchen, you'll see us eating together. And so usually we actually try to influence potential founders by bringing them to Vail and make sure that they can fit into that Manitree family and culture. We really live out our investment thesis of improving human health through nutrition. And so making sure that alignment is there is a big part of who we are.
There's so much going on in this space, and I can only imagine the people who are knocking, Ellie, on your door. And you talk about some of the criteria in terms of picking. In a world where we're thinking about impact on climate, when we're thinking about innovation disruption, how do you, though, additionally kind of weed through everything that comes through your door?
So first of all, we are growth equity, and so that'll weed out some of it in and of itself. We try to be the second largest check-in behind the founder. We obviously are hands-on, and we're really kind of that last stage in. But I will say that there's themes that we stick to, and so those would be clean protein, precision nutrition, supply chain disruption, and usually they have to get through our litmus test of, are they actually improving human health? And so we call ourselves a calorie conversion business. That's a big thing for it. We've seen plenty of companies that might not be healthy. So we go after much larger kind of the themes that we've seen, such as functional beverages, where 30% decline in soda sales. It's got to be a category leader with a very large addressable market. So we're not in just kind of these niche sweet spots. One last thing I'd say is we almost go in unsexy categories. Another company we just closed called Good Culture. They're the market leader in disrupting sour cream and cottage cheese. It's a great example of both ESG in that regenerative agriculture, which it appears that if the animals are treated better and the land is treated better, then that end product in the consumer is also healthier. So that's usually the way that we think about it.
All right, just got about a minute left here. I wish we had more. You'll have to come back and talk about as these investments continue. But just about 45, 50 seconds. Your dad, how does he inspire you in all of this? Or do you pick his brain, or do you say, hey, Dad, you might want to take a look at this?
My father is the greatest supporter of women. I admire, he's relentless, he's humble, he's focused. He emphasized partnership to me, and he always emphasized, say thank you, prioritize your LPs, prioritize, most importantly, your team. And so he's a guy who famously went broad and built Carlyle, and now we're helping us go deep and focusing on improving human health. So I look up to him. He's really been my key support and cheerleader, and that is why Manitree is how it is. I will give him credit. He came up with the name Manitree.
I love it.
It means food from heaven, just like he believes private equity is the greatest calling of mankind. So we're doubling ensure that with being in private equity as well as food from heaven.
Ellie, before we let you go, you are based in Vail, Colorado. Your favorite ski run on Vail Mountain, or do you prefer to Beaver Creek?
I'm Beaver Creek girl, guys.
Okay.
I was a ski Vail athlete and the World Cup. So anything on the World Cup hill and downhill.
All right, birds of prey. That's what you're looking at.
Birds of prey, of course.
All right, Ellie Rubenstein, co-founder and CEO of Manitree, joining us not from Vail today via Zoom from San Antonio, Texas.
All right, let's get back to World and National News. Over to Nancy Lyons. She is in our D.C. newsroom. Hey, Nance.
Thanks, Carol. President Biden says the U.S. will ban imports of Russian fossil fuels, including oil, a major escalation of Western efforts to hobble Russia's economy. Biden says the move will likely add to the already inflated gas prices that we're seeing right now at the pump.
This is a step that we're taking to inflict further pain on Putin. But there will be cost as well here in the United States. I said I would level with the American people from the beginning. And when I first spoke to this, I said defending freedom is going to cost. It's going to cost us as well in the United States.
Biden says Americans will not be part, though, of subsidizing Putin's war. With the U.S. imposing its ban on Russian oil imports, Bloomberg's Anne-Marie Hordern says it's not likely European countries will follow our lead.
I spoke to an EU official very early this morning who said Europe's just not there yet. And I don't think the world expects Europe to be there. I mean, if you just look at Germany alone, they are heavily, heavily reliant on Russian fossil fuels. Now, Olaf Scholz said yesterday they want to loosen that dependence on Moscow, but it's not going to happen overnight.
The U.S. imports about 700,000 barrels a day of Russian crude, while Europe imports more than 4 million barrels a day. The first person to be tried in last year's Capitol riot has been found guilty. Guy Reffitt of Texas was charged with interfering with law enforcement, entering the Capitol with a weapon, as well as other charges. Prosecutors say he was a militia member. It took jurors 2 hours to reach the guilty verdict on all charges. The trial has been seen as a test case for prosecutors who are seeking convictions on hundreds of defendants who've refused plea deals. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week on Bloomberg Radio on this Tuesday. Carol Massar, Tim Stenovic. So a story that has popped up among the most read throughout the day on the Bloomberg terminal has to do with New York City Mayor Eric Adams spending much of his first 2 months in office devoted to helping New Yorkers regain their swagger. Now comes the next phase, getting people to spend more time and money in the city. I have to say, I was thinking about it, maybe because it was warmer and I was looking out and there were people out and about
It was like summer. It was like spring or summer yesterday. It was like summer.
Yes, the weather is feeling better, but as I look at, there's still a lot of places closed, boarded up. It doesn't feel like the healthy New York City that we saw pre-pandemic.
Well, one area of the city that is getting a lot of attention right now is the East Village, partly because the Ukrainian-American restaurant Veselka is located there. Full disclosure, I'm on a cycling team in New York City. We are called the Veselka Cycling Team, so we're sponsored by Veselka. So, I'm wearing Veselka jerseys when I go cycling, and very close with the owner of of the store.
Yeah.
But I did see yesterday that Eric Adams was there with the owners of the company, with the owners of the restaurant, the Burchards, and he was partly there to show his support for the Ukrainian community in New York City after Russia's invasion of Ukraine, but also to show that, hey, New York City is open.
New York City is open, and I guess he also, I think, went to a town hall at Goldman Sachs.
Yep, that was closed press. We don't know what he said.
Okay, we don't. But my understanding is, I guess, at both places, extolling the importance of being in the office and having workers around to bolster small businesses. I think that he did somehow say at Goldman, right? I think we found out about that. But yeah, out and about, and to say that we are open.
Yeah, his efforts took the form of a 2-hour walk and talk tour of the bars and restaurants in the East Village. He bopped in and out of 4 eateries. He hugged people. At one point, he picked up a dog and he asked the dog, "Do you love me?" He chided a heckler for smoking cigarettes. He promised a young man on the street with a nose piercing to get one himself. And he pledged to visit the neighborhood's famed Russian and Turkish bats across from my old apartment.
I love that. Open table data showing that restaurant reservations had nearly returned to once normal levels around Valentine's Day. City still, though, struggling. So as we look at some of the stats, we are certainly not quite back to pre-pandemic levels.
sports, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. McDonald's, Coca-Cola, and Starbucks are temporarily halting business operations in Russia amid intensifying backlash since the invasion of Ukraine started nearly 2 weeks ago. The iconic American brands announced their decisions in a flurry of announcements, joining hundreds of other global companies that have halted work in Russia since the war began. PepsiCo says it, too, will suspend soda sales in Russia, but will continue to sell daily essentials such as milk and baby formula. Down day on Wall Street today. At one point, we did have the Dow Jones Industrial Average up 585, ended with a loss of 184, down 0.6%. S&P lower today in a volatile session, down 30. A lot of the losses coming in the final hour of trading, down 0.7%. Nasdaq down 35, a drop of 0.3%. 10-year down 19.30 seconds. 10-year yield 1.84%. Spot gold up 2.8%, $20.52 the ounce. West Texas Intermediate crude up 4.4%, $124.59 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So you are listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. I want to jump right in because we bring up the subject of college. Tim has a little one, so he's got a few years to go. I just had a daughter go off to college.
I just wake up in a cold sweat in the middle of the night and wonder how much it's going to cost.
Yeah, you're going to be like spending a lot of money. But,
yeah, thanks.
But brings up that debate about what we are getting or what our kids are getting, especially when we talk about student debt. There's so much out there. What should college be? And someone has written about the real world of college, what higher education is, and what it can be. That is the title of her book.
Wendy Fishman is Senior Project Manager at Harvard Graduate School of Education. As Carol mentioned, her new book, The Real World of College, What Higher Education Is and What It Can Be. She joins us on the phone from Wellesley, Massachusetts. Wendy, how are you?
I'm great. Thanks for having me.
Yeah, well, thanks for joining us. What was the moment that you realized you needed to write this book?
Well, I have 4 children. 3 are in college, so I can feel your pain that you just
You said 3 are in college?
3 are in college.
Oh, my God.
2 are seniors, twins, and 1 is a freshman. And I've been doing research with my partner, Howard Gardner, for more than 25 years of young people and how they think about work and their own educational experiences. And when we began to speak to some students on various college campuses, we were really struck that so many of them had never really thought about the purpose of college. And so we designed a study to understand what their perspectives were.
And one of the things that you found, right, is that students are not preoccupied by political correctness, free speech, or even the cost of college. They are most concerned about their GPA and their resumes. They see jobs and earning potential as more important than learning, which kind of breaks my heart because I have to say, and not that my parents, I'm one of 7, so there was a lot of like, go to college, do well, and make sure you get a job. But it was also find something you love to do, but also I was given the ability to just kind of take it all in and have great conversations with people and different points of view and meet people from parts of the world that I'd never met before. Like that was such a big part of the learning experience. And I did think about what I wanted to do professionally, but it wasn't like I was constantly thinking about, am I talking to recruiters and am I doing the right internship?
Exactly. And unfortunately, we found almost the exact opposite from the experience that you just described. In the book, we describe 4 different mental models or approaches to college. And we find that more than half of our students, and this is 1,000 students across 10 very different schools in the United States, that range in geographical location, that range in selectivity, non-residential schools, residential schools. We find that students are preoccupied with this transactional notion of college, and especially the job. And they create experiences in college in order to put themselves in the best position to get a job when they graduate college. And it really governs their entire experience. And unfortunately, in so many ways, we feel that the mental health of young people in college is closely linked to this transactional notion of what college is to them.
Yeah, you're taking me back to my college days because I did overall have a great time in college, but there were so many moments that I, wish I wouldn't have spent in the library, and I would have actually been hanging out with friends because I really wanted to put that extra time in on the paper. I needed to study for that exam. And I look back on that and I was like, what did I miss out on by being so concerned about how I did? And where did that pressure come from? And this isn't a therapy session for me, Wendy, okay? It's not, I promise.
Well, you know what? We interviewed 2,000 people across these 10 different schools, and I will tell you that when we finished the 1 hour-long interviews that we conducted with every individual, they told us it felt like therapy. So this is not unusual to what we've heard before. But students, as I mentioned, are so preoccupied with the transactional nature of college and with developing the best resumes and to getting the A's that in so many ways this is creating a lot of anxiety for them. And while many newspapers and books are talking about mental health and all sorts of issues such as depression and suicide and bipolar disorders, and we heard some of that, what we heard more was about this overwhelming anxiety and pressure to develop the best resume and pressure to get A's. It's causing students sleepless nights. Students feel that they need to be perfect, and in some cases, to be so perfect that you don't even have to work hard to be that good. And so that's what we heard over and over again. And only 20% of the students that we spoke with volunteered that they had mental distress themselves. But almost every student talked about mental health on campus, as did faculty and administrators and parents and trustees and young alums. It was one of the very few agreements that we had among all these different stakeholders that we spoke with. Yet 20% only admitted to the problems themselves, which means everybody else is still noticing it. That's how prevalent it is on campus.
Wendy, how do we do a rethink on this, especially when costs are $60,000, $70,000, $80,000 plus a year? So I feel like many of the institutions are to blame too because they become so expensive, and they say it is expensive to attract the best teachers and have the best facilities. Like, we've gotten away from it's just a great place to learn and you don't necessarily need a lot of bells and whistles. And certainly the social aspect, I think about how much I learned from my friends when we cooked a dinner and we all sat around the table and just had discussions, and all of us coming at it from different ways because we grew up somewhere differently, and what a learning experience that was. So I don't know. We've got about a minute. How do we do it better?
Well, we believe that colleges are trying too hard to be all things to all people and not delivering on its mission of developing intellectual capital. So in the book, The Real World of College, we talk about a measure that we created called higher education capital, which is exactly what you mentioned, the ability to analyze, to reflect, to connect, to communicate on issues of importance. And we have lots of recommendations in the book about how institutions can make that the primary focus of a higher education, which it needs to be. I think too many students, when they visit campus, hear about internships, study abroad, jobs, dining halls, gyms. You have to squint to find the intellectual components. And campuses need to make that mission known and to onboard students to that intellectual mission from day number one.
Do we just got 20 seconds? Do we make the mistake that brand name schools or well-known schools have better intellectual experiences? Just very quickly.
Not better intellectual experiences. In fact, we find that most college students talk about their experiences in similar ways across the board at these 10 different schools.
Wendy, come back. We'd love to continue. This is certainly something, a provocative subject. We know our audience cares, and certainly Tim and I do. Wendy Fishman, author of The Real World of College, What Higher Education Is and What It Can Be, writing this with her partner, Howard Gardner. All right, busy day. We're getting ready for another one. For Tim Stenovic and the Business Week team, I'm Carol Masser. Have a safe evening.